Hello everyone, welcome to Trade Breakdown and EU. I'm gonna start off with the daily time frame and we're gonna discuss what we've got here. So in the last few breakdowns, I kept mentioning this range high is our long-term drawn liquidity or our long-term target, right? Now you can see right here it has now been reached. Now we have to determine what happens next after the drawn liquidity has now been reached, right? And to do that, we'll first have to use market profiles to determine what happens after we have an expansion, and with that expansion, we test a key level, right? We have to answer that question first. And obviously, we know the answer to that, right? After price expands and that expansion profile ends, it often leads to a retracement or a reversal profile. Now, in order to expect a reversal, our long-term drawn liquidity has to be lower, and in this case, it isn't. So we're only gonna expect a retracement profile, right? A retracement profile before we make another expansion higher. Now, the question that arises is that where could we expect this retracement to go, or simply how far this retracement is going to be, right? And we know the answer to that as well. What we're gonna do is we'll take this whole swing as a dealing range. You could just take it as an expansion swing as well and divide it into two halves, but because it has taken out both range high and range low, right? So it has taken out both range high and range low, so for that reason it's also a dealing range for us, right? So right here, when we take this swing as a dealing range and we divide that into two halves, we see that this Monday's candle low, right? This low perfectly aligns with the 50% of the equilibrium of this dealing range. And below that, we know that this is the discount region, right? Below equilibrium, we've got the discount. And we've got an FVG there as well, which can potentially be our discount key level for this dealing range. So the framework is that the Monday's candle took the range high and then it formed this new dealing range. And now for the rest of the week, we're going to expect price to trace back to this Monday's candle low or this FVG, which is our discount key level. And once that is tested, then we can expect an expansion from there, right? So last week I expected price since Tuesday to take out this Monday's candle low, and that's exactly what happened here. Now right here you can also see that the Monday's candle also tested a key level in the form of this range high, right? So keeping that in mind, we'll also expect a Monday half the week profile, weekly profile, right? And I'm going to expect, and we're going to expect the rest of the week to continue to retrace lower to the discount region of this bullish dealing range, right? That is our higher time frame thought process, right? So since Tuesday, I determined my drawn liquidity to be this Monday's candle low and this discount FEG, and my bias was bearish, right? And I determined that based on multiple factors. I determined it based on market profiles, based on dealing ranges and key levels, and not only that, but including weekly profiles too. So all of these factors led me to determining my drawn liquidity for the week, which was the Monday's candle low or the equilibrium of this dealing range. So now again, we've done the two main things on the higher time frame daily chart, right? And now we're going to move on to the 4-hour time frame to find a CRT there. You can see that in all of these trade breakdowns, I'm using a logical process with a logical objective framework, right? And that framework has specific factors and protocols, right? Which tells me and based on which I decide whether we're going to expect higher prices or lower prices, right? It's as simple as that, right? And that's exactly what you should have for as well. What you should do is keep your charts clean and just use this logic to understand what price is telling you and not what you want price to do, right? You don't have to force anything. So let's go over to the 4-hour time frame to find a CRT there for a lower time frame entry. So right here on the 4-hour, we can see this dealing range, right? and here's the discount region of this daily range. Now we already determined that our drawn liquidity is this Monday's low on the daily chart, right? Now our objective is to find a CRT on the 4 hour, and then we're gonna position ourselves in that CRT and then trade it on the lower time frame based on time frame alignment. Right here you can see that during Tuesday and Wednesday's price action, we had this move lower. I couldn't find any CRT or any entry on Tuesday and Wednesday, so I stayed away and just kept waiting for a CRT and a high probability CRT to form so that I could trade it. You can see I waited 2 whole days for an entry to form and I did not force anything. That's what trading is all about. It's mostly about being patient and waiting for your entry setup or your model to form at the right time, at the right place, right? Sticking to your plan at all times is what you should aim as a trader. And if you're not going to stick to your plan and routine, it's going to mess up with your performance, right? If you force anything on the charts or if you force anything on the markets, it's never going to work, right? And if you always have that feeling of missing out or FOMO, that will mess up with your performance and your performance would not be optimal, right? So right here, what you can see that even if we had reached the drawn liquidity, right, and I missed out on taking trades there, I still would have been content with it because I know that I can just trade another week, right? That's not a problem for me. So make sure to keep following your plan and staying disciplined at all times, no matter what, right? Now, right here you can see the way how I found a CRT here on Thursday is first I waited till London Open to see what the Asian session does, right? And what sort of price action are we gonna have. And right here you can see that we've got this FVG right here, this 4 hour FVG. And if we divide this FVG into two, we can see that right here we've got the midpoint of this FVG, or what we call, or ICT traders call, the consequent encroachment of this FVG, right? You can call it whatever you want. The idea is that it's the premium of this FVG, the upper half, whereas the lower half is the discount region. Right? That's the idea. You can call it whatever name you want. The upper half, lower half, premium, discount, it doesn't matter. Now you can see that we've already tested the lower half of this FVG during Tuesday's Wednesday's price action, right? And now during Thursday, what happened is we tested the upper premium half of this FVG and then we expanded from there. Now what happened during Thursday is that during the Asian session in CBDA, we did not test it any higher time frame key level and we just formed a range, right? We formed these two for our candles right here, right? And now as soon as the London Open kill zone started, I took this candle as a CRT because first of all, above it is a key level in the form of the premium region of this FVG, and also with that we purged this CRT at a key time, which is the London Open kill zone. And not only that, but also this CRT was formed at this range high, which usually tends to be a good place for CRT to be formed, right? And such CRT always has high probability. That's why I took this as a CRT and decided to trade it on the lower time frame once it was purged, right? Now our analysis on the 4 hour is done as well. We found a CRT, right? And now we're gonna move over to the lower time frame to trade this CRT with an entry setup or a model. So first of all, we started with the daily, right, to determine our drawn liquidity and daily buys, and then from daily I went down to the 4 hour time frame to find a CRT there, and now our objective is to go down to the lower time frame to find an entry setup. So let's go over to the 15-minute time frame and let's see what we've got there. First of all, we're going to put on the opening and closing times, right? Now, right here you can see that during Asian session, we did not tested any higher time frame key level, and we just ranged, right? And we generated liquidity and formed a higher time frame CRT on the 4 hour, right? We did not do anything significant other than that, right? Then during London Open kill zone, which is from 2 a.m. to 5 a.m. Eastern time, we purged that CRT And after that, I started looking for my entry in the form of model 1 entry. But there's a but, right? Remember, my entry was a bit refined in terms of times and key levels, right? Let me show you how. If you had taken a model 1 entry here, then you would have first lost a trade here, and then the second one you would have won it, and then you would have been still in profits after that. But you would have lost the first trade based on model 1 entry, right? Because we had this CSD right here after the CRT was purged, and then it went above to take the stopper, so you would have lost that trade. But I didn't took that trade because I had a more refined entry in terms of time and key levels, right? And also I waited for a lower time frame key level to be tested, right? That's another important thing you could add to your entry criteria as well. We already know that we must have a higher time frame key level on the 4 hour to consider a CRT as valid, right? Which we had in the form of the 4 hour FEG and the premium region of that FEG, right? We already had that. But also along with that, you could also add another criteria, an optional criteria, which is a lower time frame key level too, right? And right here, what I did is I looked to the left for a key level, and right here you can see that we've got this expansion swing and we've got this breaker right here, and which originated from this expansion swing. Now, if you watch the last chapters diligently, then you'd know why this is a breaker block, because this is the load that purged the high and then it got broken below, so this load became a breaker block. What I did is I also waited for this 15-minute breaker to be tested as well. Now remember, this is not a must, right? It's just an optional criteria to rather refine your entries. It's not a must, remember that. And also, if it's too overwhelming for you, then you can just avoid it, right? You can avoid it. But here is what led me to refine my entry. I just wanted to show you, if some of you, if it's not too overwhelming for you, then you could add it to your entry criteria. But remember, it's gonna have its pros and cons, right? Now, what happened is what happened here is that I knew that first of all we tested a higher time frame key level, right, already. But if I want to define it even more, it could potentially test this 15-minute key level as well in the form of this breaker. Now remember, I could have missed out on this opportunity if, let's say, the first trade had worked out, right? Then in that case I would have missed out on this opportunity. But the thing is, I would have been content with it, right? So take this with a pinch of salt, because everything has its pros and cons. For me personally, I'm satisfied with missing some trades and only catching the high probability trades. That's why I've added this criteria as well. Now again, let me say it again, if it's too overwhelming and it could cause a bit of chaos for you in your trading, then you can avoid it, because it's not a must, it's just an optional, right? So once the key level was tested, I waited for a model 1 entry, and then I took an entry here with my stop loss above, and I targeted the opposing end of the range and 50% of the range, right? I actually closed my entry quite below because I let this trade play out till the higher time frame drawn liquidity was reached, right? We're gonna learn about that in later chapters as well.